Hey everybody, welcome back. Well, we're going to go look at these top levels and see if we have any shot of getting up here before the end of the year. And the bottom line is probably not, but that's not going to stop us from trying apparently. You can see again today we have another breakout. And we're going to go through a bunch of names today and we're going to spend some time trying to figure out what's going to move into the end of the year, which I think is really important. But most of all, once again, higher high. I really want to drill something into everyone here about what they should be focused on. You see these red bars that are right here? You see that one in the NQ? See how it's standing right there? All right, so if we take a look at something, we can see these bars on Wednesday, right? And you see where you are Wednesday on the Russell already. You see how you're already up here and you already made the higher high, clearing it. Retest, holds. What level did it hold? It's holding a multi-year breakout. All right. So the idea that the Russell is done is pretty much nonsense. Let's get rid of that. It's just ATR. But the Russell is done. The Russell is not done. The Russell is just literally breaking out of a multi-year base. This is just getting started. And we're going to hammer some things out tonight. Some things that I just keep looking at and I keep reading and seeing out there about we're too high and we have to come back down. And does the market go straight up? No. But as we know, when there is a macro event that is shaping the way that things are done, the market tends to do what? The market tends to move a little differently. So right now we have a macro event that started in November 1st. We are all aware of this macro event. We are all aware that the Fed changed completely from saying we're going to raise rates here. And then we know exactly what happened here. We're all aware of this. Now, we're going to walk through the macro, the fundamentals, and the technicals, specifically not only on the index, but I'm going to do it for a name too. More so the fundamentals and the technicals and show you how they all lined up today on a stock that moved 82% that we were fortunate enough to be a part of. But most important, you need to focus on why you're moving. You need to understand that no matter what you think, it really doesn't matter. What matters is they are not raising rates. They are cutting rates. That's macro. That is the entire game. That is the entire shift of what happened here, where he said we're going to raise rates and we are going to decrease the balance sheet. This point right here, let's get the little marker here. Let's not play games. See this move right here? And let's just mark them off, just so you can get this, because this is really important for people to get, because you're getting batted around. If you're not doing exceptionally well right now, it's not because of your technical analysis. It's because you don't have a general, and I mean, you don't need a huge one, a general overlay of what's going on out there. So if you mark these key levels right here, this is where the Fed said, hey, we're going to have to start really reducing the balance sheet and raising rates because inflation's getting out of hand. Meanwhile, remember $1.7 trillion they injected in the capital, and they were buying mortgages, making it hard for people to buy houses, and then they were blaming BlackRock. Anyway, we'll do that in another video. So you watch how we're trading, go and look at what these dates were and when you moved like that, and go and look at what happened on these dates and why they happened. Okay, they're all macro events that led to triggers. All of these are macro events that led to triggers, whether they were Fed speeches about what he was going to do or whether or not they were CPI events. Every single one of these, all these wicks down here, all these drops right here, they're either Powell speaking or a CPI number, period. It's important that you get this so you understand what's happening here and what's happening here. So these are macro events. This is when CPI peaked, period. And people were saying, oh, it didn't peak. And I want to get this out there. You really need to watch who you're listening to, because if they're not talking about any level of macro, I don't care if they agree with me or disagree with me. If you've been watching this channel, you know I'm wrong. I'm wrong. There are times where I'm just off, period. And that's the game. You're going to be wrong. You're going to make bets. Those bets are going to be wrong. But if you are looking at this market and you are not looking at the macro and you are not looking at the shift, the clear shift that is happening out there in the 10-year, and now you're at 379, you were just at 420, and everyone's saying, oh, they're really not going to cut rates. This is all just a big bond squeeze. That is the dumbest thing that I've ever heard, and that's about as nice as I can say. I don't think I can even clean it up. But you really need to understand this, and just take a look at this. I mean, it is, as people like to tease me, I will say that this is absolutely glaring. Now, when I say it's absolutely glaring, let's just take a look. I wonder what happened at 11:30 today. Oh, look, bonds rallied. I wonder what happened at 1 o'clock today. Oh, look, bonds rallied. I wonder what happened in those events. Okay, they were bond auctions. So if we take a look at the bond auctions, and then after the bond auctions, and we just take a look at something like the SPY, and then we just take a look at something like the Qs, RTY, And we might as well just throw the dollar in too. And we take a look at how this is all playing out. And do you see something around the same level? It's always right around the same time, always. And you see the SPY and the Qs and RTY, and what do? They all spike and they all hit new highs on the day. What happened right around there? Bond auction. It's like Groundhog Day, guys. It's literally like Groundhog Day. You can go back and look at these dates and these bond auctions. That is a macro event that is driving these moves. It has absolutely nothing to do with technical analysis, period. It just doesn't. And if just to overlay this on a much longer term time frame, you can see it really very clearly here. They buy bonds, the dollar drops, equities rally. You should be able to see this really clearly, and I'm just going to mark it with one demarcation, and you should be able to get this completely. Russell up, S&P up, NASDAQ up, dollar peaks down, 10-year down. It's not rocket science. Okay? So just keep this in mind, okay? Indexes rally, bonds are bought, dollar drops, period. That's the whole trade, and that's been going on since right around Powell's speech, macro event. All right, good. Really important point, because I keep seeing people talk about doing things. And I'm not saying that we're not overbought. Let's be real clear about that. That's not what I'm saying. I'm not saying that you're not overbought. I'm not saying that you can't rotate down. I'm certainly not saying the first 5 days of the year, I don't think they'll be selling. We'll cover that in the next video. But that doesn't mean that it's going to be the same way as it was before. And I think that's where people are getting confused. So if we go back and take a look at this very clearly, 48.61 is your next level. We'll see if we get there very relatively shortly at this pace, but you are over these wicks. Understanding the macro and what I just did is the difference between people shorting here or whether or not you're just very simply covering your longs and waiting for a new entry. We chose to cover longs and wait for a new entry. We got GDP, we got PCE, and we were able to profit from those and scale into positions because we were watching one thing. We were watching the main trade. This is the main trade. They are buying bonds. I'm going to say it again. This is the main trade. The equity markets are moving based upon the main trade. Don't get it confused. Bonds are not rallying because the market is going up, okay? Just understand that bonds are not rallying because the equity market is going up. The equity market is going up because bonds are rallying. A month ago, we did that whole video on real rates. This is a really important concept. It's why I keep repeating it over and over again, specifically in this video, because you need to understand that until this changes, none of what's going up is going to rotate in any meaningful way. And let me show you what I mean. So if you take a look at TLT, we were fortunate enough to understand this down here. And if you're watching these videos, even the public, the free ones, even not in the private ones, we were talking about this and saying, that's it. It's the bottom of the bond market. Start looking at the long end. So we were fortunate enough to buy this here, right? And we have not sold one share of it. We're up $15 in this trade. HYG, same thing. Bought that day, never looked back. Now, when this took place, there were a couple things that we noticed. And this is where it gets really pertinent. All right. Once you get here, you're starting to look at interest rate sensitive names. And then you want to see how they act going into the other Fed meetings. That just makes sense, right? Okay. So you start looking at the interest rate sensitive names. So even the ones, like take a look right here, November 1st, what happened? Okay, $20, it's at 50. This is not a technical move. I mean, it is, but it isn't, right? I hope that makes sense. Okay. UPST, November 1st, right in here. All right. Then they had earnings and it was a disaster, quite frankly. CVNA. All right. These are all what? These are all stocks. This had earnings right around that time, but same thing, right? So these are all stocks that are linked to the consumer. If you go here and you take a look at XLRE, okay, November 1st, all right? Bottoms put in. There is nothing technical about this chart that's going to tell you that you need to buy it here. Nothing. But yet this provided an excellent spot for us to start looking at SLG and started to buying VNO, which is down to 52-week high. And now everyone's going to look at these and wait for the pullbacks, right? Not understanding that the game's already been played. Not understanding that they already missed, 10 points or whatever the move was while this was trading under book value. Understanding that macro is the difference between you going out there and shorting the Dow or buying names in here, right? That's the difference. And that's why I'm hammering it home. Today, it's Groundhog Day. We just went through this yesterday where we were talking about the same exact sectors are going to continue to move. Right? Here we are, LABU. We're going to talk about why this is up, and we're going to give you a mini macro overlay of a trade that we did. LABU is something that we're in, and we got in right around here. Almost at this point, we're pretty darn close to a double. So this is actually something that we bought right in here. And now from where we're in at, we're pretty darn close to that double. I just looked at the spreadsheet. So it's pretty interesting to me that we're in this position and I have no reason and no concern about getting out of this trade. If we go and take a look, we talked about the home builders. That's setting up a flag. This has been moving since when? November 1st. The reason I'm being so emphatic about this and the reason I'm pointing out these things that are up triple, because if you understood the basics of macroeconomics, just the basics of how this stuff works, you would have started looking for these before you're watching people point at them on charts. You would be ahead of this. And the goal is to get ahead and find out where there's edge. And there's always edge where there's a shift. Once you understand the shift, it becomes really very clear what's going on. And then you can see exactly November 1st right in here. And now you can see how DPST doubled from there. Okay, all these 3X ETFs I'm showing, they're all doubled from there. We went through this yesterday, so I'm not going to bore everybody by going through it again, where we're talking about, the specifics of the SOX and why the SOX is doing great. But all three of these that I just went through outperformed SOXL since November 1st. And you never had to worry about a semiconductor, anything going on with semiconductors in China. And there's a little value in that. And I keep getting asked the same questions over and over again by people, and it's fine. But the question is, when are you going to close your 20-year position? I'm going to close that position on the 20-year when this changes. When he's done raising or cutting rates, before that, I might get a technical indicator that tells me he's getting close to cutting rates, or stop cutting rates rather. But when he's done cutting rates, that's when I'll get out of here. Until then, there's literally nothing for me to do. What if it just stays here and just keeps grinding higher? Why do I want to be out of the trade? And just for a point of reference, so you can just see them. And I believe in this. I believe in showing the timestamps. These are the timestamps. This is when we put these trades on, November 1st, so you can see them. Okay. And essentially it was this day. It's not rocket science why we did what we did when we did it, right? And it's really important for me to explain that so that people get it. So the question is, when you're looking going, what should we be looking at? Well, did they stop cutting rates yet? No. Okay, so why would biotech stop going up? When you have all these mergers going on at a clip, and we're about to go through CYTK. With all these mergers going on, why would you put yourself in a position here where you think that that's going to stop going up? With all these mergers going on, I think there's something like 200 names still trading, or 150 names still trading under book value. And now you have rates dropping, which means their borrow is less. Hopefully you follow that. If you take a look at regionals, who benefits the most for banks? Regionals being cut. Where are 15.9% of all regionals and small banks located? In the Russell. Look at the Russell breaking out. So when people are looking at these charts and they're looking at these trades and they're saying, well, it's got to end. It's going to end soon. It has to end soon. Just because you didn't buy it doesn't mean it has to end. Okay, so then you start looking at the home builders. When's that going to stop? Well, when are rates going to stop going down? When are the mortgage rates going to stop dropping? So the point that I'm getting at, and I hope I'm getting this point across, is you're asking the wrong question. And I'm not saying this to hammer this point home, I guess is why I'm saying it. I'm not saying it to be mean or facetious towards people that are shorting that dip, right? What I'm trying to do is I'm trying to get you to think. That's the whole purpose of why I do these videos. Okay, that's really why I do them, and that's why I do them the way that I do them. Because it's to provoke. If I was trying to get just views, I would just say stock market crash. They get the most views. If you're wondering why people always have a video and they always have the title crash in there, okay, that's because that gets the most views. So the more you learn, right? Anyway, but if you want to understand this stuff, that's why I'm going over it. Instead of asking yourself, when are these going to go down? Well, here's one thing you could be asking. When are they going to increase the supply of houses that are being built? Okay, well, they're not for a long period of time. You're still 6 million in the hole, right? If you go and take a look at NAHB data, still in the hole. All right. So when are mortgage rates going to stop dropping? Well, they're not. They just started dropping. Okay. So instead of asking yourself, how high can this go? Ask yourself, what is going to happen fundamentally for home builders to start seeing a deterioration in earnings? If you ask yourself that question, and you realize that what you would need massive supply of new houses. Check, don't have that. You would need mortgage rates to start going higher. Check, don't have that. You would need people to not be able to afford the houses. Check, they're still able to afford as of now. Now, could one of those things change in 3 to 6 months? Yes, but if you understand the fundamentals, right, they might start appearing in the technicals, but at least you would know what the heck to look for. And that's why it's so important, right? Macro, fundamental, technical. Now, I'm going to start by showing this here so you can see it. This is CYTK. This is something that we traded today. You can see the massive move down here, and you can see how we jumped and how this played out today pretty nicely. And you can see all your levels up here. These are the levels that we're looking for. What I tend to do with these kinds of ideas, I like to mark off exactly where I think the support and the resistance and main levels are going to be, where I could have some issues. And that's exactly what I did here. And 70 was also an issue this morning, pre and post, with the data announcement. And of course, what they're looking for is we're looking for some kind of, quote, buyout. So this is a great example of having a fundamental catalyst and as well as having a technical catalyst in the chart. Now, what do I mean by having a technical catalyst? Well, when you were set up the breakout sideways 1, 2, 3, interestingly enough, they came out at 4 o'clock after the close of the market and said, hey, we're going to release our data tomorrow. They released their data, stock traded up, and it traded up pre-market. We were actually buying this pre-market. If you listen to the pre-market video, the public one today, I was pretty vocal about what I was doing. I was very vocal, I think, about what I was doing. And it just did exceptionally well, but I just want to show something. I wasn't done there. So before I show the trade, you can see right in here, 931, I said I did nothing with it yet. I mean, I already had it. We had it from the day before. And obviously we did quite well with that position, but also more importantly, we added to it today. I didn't sell, I added. And then I raised the stop there. And then I was out of the ad. I'll show you exactly where that happened. You can see how fast it happened if you look at these timestamps. And then you can see that I bought puts against the position and hedged the entire position that I had left. And then later in the day, I was just pointing out we were holding the open and what we were going to do with it. And then as time progressed, more importantly, I started talking. It's in here somewhere. I did a secondary day trade on it again and pulled money out again. Then I bought the 80 calls. This was my focal point today. And the reason for it was relatively simple. One, you had a fundamental catalyst. You had a fundamental catalyst, period. Excellent data. And people will say, well, once you know that data, the trade's over. Okay. This was a very simple buy, and I can show the trade live, but it was a very simple buy, 1 minute bar, trades up. I had my levels marked. So when we got up to our level of 83.05, which is what I was looking for, I'm selling into positive slippage. So I'm not getting out, right, where I'm going to have an issue. Stock drops down, and by the time it drops down, we're gone. We're already out of that secondary ad. By the time you're down here, we're watching it. And then as it trades up, we start hedging the position again. And it just provided a couple really great trading opportunities. Later in the day, this became really clear that we were going to push higher. Once we saw that opportunity, I actually increased the size of the position yet again. And I just married puts to the whole thing, the 75s, because we're looking for some kind of takeover. I think it happens. I think that you're going to see tons of biotech, tons of biotechs that are going to get bought this year. But the important thing is what you're doing, and this is one of the important things I want to take home, is that we're marking off those levels before the day even started. So that in the heat of things, I'm not second guessing where my levels are. I know exactly where my levels are. And it's that understanding of where those levels are that are going to allow me to move faster than everybody else. Because I'm not second guessing. I know where my potential resistance point is. So when I get there and I start rejecting up here, that's it. It's time for me to go. And I'm pretty decent about drawing the levels. As you can see, when it got up there, that's where we started running into problems. So the question is, how do you do this? You do it by understanding that just because the stock, you missed a stock, there was nothing to miss here. There was 10 points here all day. And then it gives you a retest of the open, rallies, comes back down, doesn't make it, flips VWAP. This just gave you opportunity after opportunity today. And this is another point. Just because you miss it the first time doesn't mean it's not going to provide another opportunity. That's something we can go over in other videos. That's it.